Good afternoon, everybody who's joining us from Europe. Good morning to my fellow Americans, maybe even good evening if you're joining us from Asia. Welcome once again to a new episode of our oils webinar, Vesper's bi-weekly effort to keep you updated on everything that's happening in the oils complex. From palm oil to soybean to sunflower, we're going to cover it all today. And luckily for you, and maybe also for me, it's not going to be me who has to cover it. I'm joined by our analyst, German. German, thank you so much for joining me once again.
Thanks, Falco. Yeah, happy to be here. Lots of interesting stuff going on in the markets. I can imagine, we've got some interesting topics to discuss today.
Yeah, I think we have Brent crude movements that we need to discuss, and especially, of course, their impact on vegetable oils. I think there's some updates on palm oil supply. I think you have some information, or at least some interpretation of the upcoming meeting between President Trump and President Xi Jinping. Then we have the rapeseed supply, sunflower plantings, situations in the lauric markets. Well, quite a bit that we have to cover today. And we'll also, at the end, tackle a little bit of the changes to the dashboard. If you have any questions, feel free to ask them in the chat or in the Q&A during the episode. But I think we'll just get straight started with the Brent crude oil market. What's been happening there?
Sure. So let me share my screen and go to the futures section. All right, you can see it. Yes,
Yeah.
Great. Yeah. So again, the Brent crude oil soap opera continues. As you can see, in terms of the weekly changes, the Brent declined to it closed yesterday at $104 per barrel versus the highest point 114 previously. However, what was interesting is that rebound that happened from the 7th of May onward. So basically the market got excited, and I mean, let's put it this way, that there was some news that again peace agreement between Iran and US could be reached. Some of these news pieces were coming, and the market reacted swiftly with the sharp decline from 114 to 100. So markets got positive that the conflict would be over. However, on Monday, the rebound happened because the US president called the Iran's proposal unacceptable and said that the ceasefire is hanging by the thread, so to speak. That basically caused this rebound. However, as you can see, prices are still below previous week's levels. And that's because the market is still optimistic about the exchanges of the proposals between US and Iran. The market is optimistic that the peace agreement can be reached, that the Strait of Hormuz could be opened, and that's what keeps prices below highs. You said, you mentioned the impact on the veg oils, and of course, Brent is pretty much the largest driver now in the veg oils markets, and similarly to Brent, vegetable oil prices are currently below previous week's levels, mirroring the movements in the Brent.
And I think we have a lot of people joining for who it's perfectly logical why Brent would be such a big driver in the vegetable oil markets. But for the people who are not totally aware, can you explain why the effects are there?
Yeah, of course. So short explanation that there is this interconnectivity between biofuels and vegetable oils, because vegetable oils are used largely as a feedstock to produce biofuels. So for example, in Southeast Asia, it's palm oil. In Latin America and US, those are soybean oils. In Europe, it's rapeseed oil, a little bit of sunflower oil to a much smaller extent. And when the energy prices, I mean, LSG or your typical, fossil fuel prices go up, that makes biofuel blending more attractive economically. So the demand for biofuels increases, at least theoretically, and that drives up the demand for veg oils that are needed to produce this high amount of biofuels. So that's the connection, basically. So that's why veg oil market participants always monitor Brent as a key index within the oil markets, and futures traders, hedge funds, etc. They react very swiftly to changes in the Brent.
Okay, thanks so much. And I think those swift reactions are also what we see with the current volatility, where the outlook for peace remains unclear and every signal gets a bit of a shot up or a shot down, depending on how optimistic or pessimistic the market is. Well, let's continue to monitor that situation, but then shift the conversation to palm oil. So there's new supply numbers that came out. What's the supply situation, and what do you make of the updated numbers?
Of course, let me go to our nice production widget. So this is palm kernel oil. I'm going to choose palm oil crude. Malaysia. So yeah, long story short, the MPOB S&D numbers were in line with the market expectations. So as you can see, for April, production kept growing with a strong pace. Exports declined by nearly 15%, a lot. And as a result, ending stocks increased, but quite marginally, I would say 1.7%, but still it's material. So the supply is increasing for Malaysia. But what's quite notable for me, taking into account this large production in January that people remember, if we put year to date, if we click year to date button here, you'll be able to see basically the accumulated production from January to April in this case. And as you can see, at the moment, this 4-month number is pretty much a few years record. I need to refresh my memory what was before 2022, but at least taking into account these years, the number is quite high. And for example, it's nearly 7% above production same period last year. So with quite high confidence, yeah, we can say that the Malaysian production so far good this year. And yeah, I think it's worth to show Indonesian production too, which is of course the numbers for it are delayed because of how the statistics agency operates in Malaysia, but still it can give us some idea on how they started the year. And as you can see, FICO, yeah, also very strong start of the year. Of course, it's just January, February, not January, April as Malaysia, but still also very strong beginning of the year. So that's what we've got now. However, our viewers should keep in mind that GAPKI, the Indonesian governmental, I think it's the let's say palm oil authority in Indonesia, plus a few private analytical agencies flagged that in the second part of the year there could be issues with the production. So like now we're having a good production, both Malaysia and Indonesia, but a few agencies flagged that in the second year, especially Indonesia, because of the high fertilizer prices, because of El Nino, because of the land seizures, the yields could decline, maybe close to Q4, some people say, but the production risks do exist for the second part of the year. I think it's worth to mention during our conversation.
Okay, it's a good one. So despite both countries starting off on amazing production to start the year, there's quite a few bullish risks related to production in the second half of the year, I understand then, in terms of weather,
correct,
fertilizer.
Yes.
Okay,
exactly,
well, good
exactly.
monitor. If we then move on from palm oil to soybean, I think another very important topic, especially on the back of the meeting between President Trump and President Xi taking place this week. What is the market sentiment, and what is your sentiment around this?
Of course, let me open the Chicago soybean price. I'm going to go again to futures and choose soybean CPOT. Yeah, as you can see, prices are on quite a strong feet at the moment. I mean, at least compared to the end of April and March values. That's because market participants are trying to price in the expectations, as you rightly pointed out, ahead of the soon coming meeting between the Chinese president and the US president. I think the meeting is taking place in a couple of days, I think 15th of May or something. I think 14th, from 14th to 15th. I need to check the last updates. At least that was the plan. It will be very important for the soybean markets, because China is the largest importer of the soybean, as everybody knows well. However, there are some let's say trade tensions, you can put it this way, between the US and China, and China and is trying to use this soybean card, put it this way, in the negotiations. And of course, the US president is interested for China to commit to larger buying of the US soybeans, so that the farmers can stay happy. However, the situation is now that US soybeans are more expensive than Brazilian soybeans, for example, and Brazilian production is very good. So there is a good available, cheap Brazilian supply. However, the market is hoping that as a political gesture, China might commit to purchase US soybeans specifically, right? So this will be important for the remainder of the year for the demand of soybeans, as well as the soybean price.
Clear. Well, another thing to keep an eye on. We have busy weeks ahead. Brent crude, palm oil production second half of the year, political gestures in the form of soybean imports. So we'll keep an eye. As these updates will come later this week, I think that we'll see what happens there. If there's a response from the market directly to it, or if the talks do end up focusing more on Iran, Taiwan, or any other topic than soybeans. We'll see.
Yeah.
Maybe let's move on to the complex. What's been happening there in the past 2 weeks?
So Rapeseed, in terms of interesting updates, like not interesting, let's say anticipated updates, the Canadian stocks, as expected. So quarterly stocks updated as of 31st March this year. Canada published stocks which are 28% above the same time previous year, and that's because of the poor exports at the beginning of this year. Maybe I can quickly show the import-export widget to demonstrate this. So I think people know the story that China put, let's say, prohibitive duties against Canadian canola and products at the end of last year, not at the end, maybe mid of last year or something, Q4 definitely. And being the largest buyer from Canada, that impacted a lot the volumes. So if we focus on the end of 2025, we were able to see that, the exports are well below 2024 and 2022 levels. So the Canada started season with weak exports. However, later they found an agreement. I mean, Canada and China, and the restrictive duties were lifted. However, stocks still, of course, accumulate because of the weak exports in the beginning of the season. So Canada will likely finish this season with quite high amount of canola. In Australia, I heard similar situation, at least for now, that the stocks of canola are on the higher end. Whereas in Europe, the situation is a bit opposite, because of the higher crush this season and lower imports of rapeseed into Europe, including from Ukraine. Europe will likely end up with tighter rapeseed stocks at the end of this season, which is going to end very soon. And will likely need to import next season as well, actively as usually, even though Europe is expected to harvest good volume of rapeseed. It's still, as usually, it will still need to import, especially taking into account higher biofuel demand expected this year onwards. Opposite to Canada and Australia, European stocks are on the lower end at the moment of rapeseed specifically.
Yeah. And then this time of year, we also look at sunflower plantings, I believe.
Oh yeah, totally. That's one of the big topics, because there is an expectation of the much larger production in the coming season. So in autumn in the Black Sea, this season has been very bad in terms of the sunflower production was quite low, well below the expectations. Tight market, so that's why the market is really hoping for the relief in the coming season, and the analytical agencies expect much higher global sunflower production. And currently, the farmers are planting. So in terms of the progress, Ukraine, I think, already planted 52% of the plant acreage, which is good, but a bit behind, not a bit, but behind the 70% last year. So it's a bit on the slower end. Russian planting is also slower, based on the reports of the local agencies. Same as Europe, also some delays in planting. That's one of the factors. Another factor is, of course, concern regarding the fertilizers applications, because the fertilizers have become much more expensive since the Middle East conflict began. Farmers might just use small amount to save up, which might impact the yields. But the analytical agencies are still optimistic that, based at least on the expanding planting area, which is expected to be larger, the sunflower production is still expected to be good next year. But I think, we'll be monitoring in each now webinar and market report the progress of the sunflower planting, to see if, at least on the planting level, the expectations materialize, right? So we have expectations of high planting. Now we need to see if it becomes a reality.
Okay. Well, some good expectations, but also some troubling signals that we already see.
Exactly.
Time to shift into the lower complex, I believe. What's been happening there? How's the current supply and demand looking? And maybe starting off with coconut oil.
Yeah, of course. So, copra prices, we see it on our end, but also hear from market participants that prices are going lower. And local players, they say that that's because of the arrivals from farms to mill gates, which increase, and also overall output situation is getting better at the source. I mean, the Philippines. Also, as we all aware, and maybe it's good for me to show the chart, the expectations, the forward price expectations. I'm just going to go to lower complex now and going to click on curve. So as you can see, FICO is clearly a backwardation, right, where nearby prices are well above the forward prices. So basically, the market expects the supply situation to improve further, deeper into the season. So that's also pressuring the prices. However, so far it's not materializing. If we go to import-export widget now, let me choose. Okay, this is from country to country. I need to choose total. I need to choose Philippines, and I need to choose, for example, crude coconut oil. Yeah, as you can see, and maybe what would be great to do year to date, similarly to what I did to Malaysian production. Yeah, so as you can see, FICO from January to March accumulated exports out of the Philippines are still, they're still below the levels of the previous years. So it's the lowest level in a few years. So despite the news that the output is improving, that output is going to be great during this season overall, exports have not increased yet. But the market participants hopeful that in the coming month they will do.
Okay, good. We have a question, which is a weather-related question. Is there any new data points that support a potential El Nino in Q4 or H2 of this year?
Yeah, no, that's of course a reasonable question. I think, yeah, I normally stick to general statements from the meteorological agencies, and I think what was said that let me see, I think 80% of El Nino chance happening. Let me open one source that I was checking. Just one moment. Um, yeah, so basically, close to 80% chance that El Nino will emerge in June, from between June and August 2026, and persist through the at least end of 2026, according to National Oceanic and Atmospheric Administration in BGAS. So basically, people say that Q3, Q4, high chance of El Nino being there, which will raise the risk of weather anomalies in the Southeast Asia, Australia, and Australia. So Southeast Asia, palm oil and coconut growing region. Australia is important, of course, for canola in our context. And on the other hand side, this weather event can cause above normal rainfall in South America, which can help the crop in contrast to the other parts of the world. And that's the most recent update that I've got.
Okay, good. Well, we've taken a slight detour across weather, but we were in the Loris complex. We just finished looking at palm kernel oil and saw that the exports were still relatively low so far. You showed us from the Philippines. Or sorry, we looked at coconut oil. We haven't looked at palm kernel oil yet. So can we shift to palm kernel?
Definitely. So similarly to palm oil, I would love to show the production chart. Okay, so let me click on the production section, and here find Malaysia, so we can discuss the MPOB recent updates. Yeah, so as you can see, supply situation is also good. April production was good. First 4 month production this year is a few years record. Yeah, we estimated production at around 188,000, which is just 4,000 tons below the actual production number. So we are like 97%. We were 90%, 97% right about the April MPOB number that got published. Exports were also very good, same as stocks. And what we did recently, and I put it on our market report, which I think is a very relevant data point to discuss. Just going to quickly go to my report. Yeah, so January, April combined, so together, PKO exports from Malaysia and Indonesia summed, we see them at around 772,000 compared to 725,000 during the same period last year. So we see the strength not only in production in Malaysia and also Indonesia, but also, yeah, very, very good exports, which of course are partly explained by slower coconut oil exports, of course. But so far, production is good and export demand is also good for PKO. You are on mute, Feiko.
Sorry about that. Then we have both fundamentals covered for coconut and PKO. What do you actually think of the price trajectory that the lower complex will be in for maybe for the rest of this year?
That's a good question. So in terms of second quarter, I would say for coconut oil, it will be important to watch the biofuel policies in the Philippines, because it can go in either direction, in the sense that the Filipino government is considering various options, from increasing biofuel mandates, which will drive up the demand for coconut oil and as well as prices, to vice versa, basically allowing high imports of biofuels into the country to battle the rise in fuel costs because of the Middle East crisis, which will then probably allow imports of potentially cheaper or more competitive biofuels and threaten the demand for coconut oil and send prices lower. So now it's a bit uncertain, but taking into account the expected rise in the output, I would say the sentiment is more on the bearish side for coconut oil for the second quarter. Similarly, to coconut oil, palm kernel oil could also decline in Q2. Of course, the market hopes for the end of the Middle East conflict. I think everybody was expecting it to end earlier, but it's getting prolonged. People still, as we discussed at the beginning, are optimistic that the deal can be reached, the strait can be unblocked, etc., etc. If it does happen, palm kernel oil will definitely take a dive, but also higher production at the moment due to the seasonality. So I would say both coconut oil and palm kernel oil look a bit more bearish in the second quarter of this year. Whereas if we speak about, for example, the third quarter, palm kernel oil might get support from stronger CPO. Meanwhile, coconut oil, if the output continues to be good, which is expected to be good, will probably go sideways or downward, so a bit the opposite to palm kernel oil. But in the Philippines, you've got the typhoon factor, which of course can add volatility. But let's say the base expectation that coconut oil will likely be on the lower side.
And well, a bearish trajectory there, or bearish expectation at least.
For coconut, but for PQ up.
Yeah, and as you said, it's kind of a market where you might need scenarios. So a scenario where the situation in Iran is resolved quicker leads to another outlook than it does when it continues longer. So it's not maybe less of a simple outlook that you can give. If we look at the other products, and we already got a question about whether it's time for palm oil prices to get corrected. Maybe let's cover at least your near-term price outlooks or direction for the other oils.
Yeah, sure. So I would say Q2 will be really dependent on the Middle East situation. Whereas Q3, for example, for palm oil, if the correction does happen in Q2, for example, that's what the market is hoping for. Q3 market expects, let's say, some support for the prices from biofuel policies in Malaysia and Indonesia, as we discussed previously, restricted Thai palm oil exports, as well as El Nino news, potential threats to the production. So I would say in Q2, the market is hopeful for the correction, whereas in the remainder of the year, there are more bullish factors for palm oil rather than bearish from the demand factors such as biofuels to the supply threats such as El Nino, land seizures in Indonesia, expensive fertilizers, etc., etc.
Okay, so well, we hope that answers the palm oil question, whether it's time for palm oil prices to get corrected.
I mean, the Middle East conflict will decide if it's time or not. So that's kind of too many bullish factors at the moment. Of course, there could be the correction is possible, but until the Brent crude oil prices decline properly, I don't think the market expects very big correction.
Clear. Well, I see that's our 30 minutes. We've covered a lot of ground in that time, going across continents, across products, and a lot of insight there. I want to thank you once again for joining us. We'll be back in 2 weeks' time, and we hope to have you there once again. German, thank you so much. I see one question come in, and we'll answer that off stream. Thank you so much, and we look forward to seeing you back in 2 weeks' time.
See you, everyone. Thank you, Faiko. See you. Bye.